It is 2024 now, and we are doing a little bit of a portfolio checkup. I was curious as to what Tyler, my usual guest and partner in crime on this channel, is holding in his portfolio, especially at the top, because I didn't know, and I probably should know that. Um, and I honestly didn't know what my biggest stock position was because I have a bunch that are kind of very close to each other, and market performance can kind of move them around from time to time. So we're going to talk about our biggest stock positions, what we think now, and whether we think they're buys right now or not. Before we get started, please take a minute and check out the link you see on your screen for a message from the Motley Fool, our sponsor. You get the top 10 stocks to buy right now, and it's a great way to support our channel. So, my biggest stock position, believe it or not, is now Pinterest. It's not by a big margin. Its ticker symbol is PINS, by the way. It's close. My top 7 stock positions are all very, very close to each other, so the order changes from time to time. So if you see me put out my top 5 stocks video and then put out another one a few weeks later and they're different, I'm not lying. It's just because they're all very close, the order changes and some could slip to 6 or 7. So Pinterest, one of the reasons it is my top stock position right now, it's not just because I've put a lot of money into it, which I have, but Pinterest was up by 46% in 2023, handily outperforming the S&P 500. And if you're not familiar, Pinterest is a social network, but it's not a social network where you go to check out other people. It's a social network where you go to check out things. When we were getting married over 10 years ago, my wife was shopping on Pinterest for wedding decoration ideas, how to decorate the venue and things like that. If you want a list of great summer reading ideas, Pinterest has tons of lists provided by people. It's like an idea platform essentially. So it's kind of been pivoting its strategy over the past couple of years um, to focus more on e-commerce. Their founder stepped down as CEO. They hired a man named Bill Reddy, who was formerly the head of Google's, essentially e-commerce offerings. And their strategy looks like it's working so far. They're doing a much better job of monetizing their users. Um, Active users are growing again, by the way. With pretty much all the social networks, they got a big growth surge from during the COVID pandemic when everyone was stuck inside. Everyone became a Pinterest user except Tyler, apparently. Everyone everyone was online a lot more. When COVID died down and the restrictions went away and people could freely move about the world, that kind of slowed down. You saw users contract a little bit, but growth has returned. At the end of the third quarter, Pinterest reported 482 million active users around the world. That's the highest number ever. And that was up 8% year over year. But the more important thing is that while users grew by 8% year over year, revenue grew by 11%. That shows that their monetization is improving. The company was GAAP profitable in the third quarter, which doesn't sound too impressive for a big social media company when you look at Facebook's profitability or anything like that. Excuse me, Meta. But they lost money in the quarter of the year before. So their margins are expanding significantly because of new efficiency efforts and things like that. And I think just from a long-term perspective, Pinterest still has a lot of opportunities when it comes to monetization. I don't know how big their user base is going to get. They're never going to get 3 billion users, at least not anytime soon, like Meta has on Facebook. But with monetization, it has a lot of opportunity. Most of its money comes from its US users, which shouldn't surprise anyone. It's a US based company. US and Canada make up 81% of Pinterest revenue right now. However, only 20% of those 482 million users are in those markets. 80% of their user base is overseas, and their overseas monetization leaves a lot to be desired. Just to kind of put it in perspective, the average US Pinterest user generated $6.46 in revenue for the company in the last quarter. The average user in Europe, where Tyler is, generated just 91 cents for Pinterest in the last quarter. The average user outside of the US and Europe, 12 cents, and that's the majority of their user base. So there's a lot of room to you're never going to narrow that gap completely. I don't expect them to generate the same revenue from somebody in Africa or the Middle East as they do from someone in the US. But there's a lot of room to narrow that gap over time a little bit. Even if they could narrow it by 20 to 20% of what the average U.S. user brings in, it would be a big deal for the company. So I like what they're doing. I like their strategy. I think there's a lot of natural uses for e-commerce in Pinterest platform. It's where you go to find things you want to buy. So why not include yourself in the process? Um, so I'm still a big fan of it. I don't plan on selling any of it. And that's my biggest stock heading into 2024. Tyler.
So I'm going to have to plead the fifth with Pinterest, like you said. I currently live in a former Soviet republic. In the previous 6 or 7 years before that, I lived in sub-Saharan Africa. So I spent zero time on Pinterest. And like you said, that even if I did, the ads on it would be pretty much non-existent anyways. I can confirm that across pretty much any social media website that you go to, Spotify, Meta, whatever. It's practically ad-free. I kind of like it. It's lovely. But that's neither here nor there. I'm going to. I have about two positions that on any given day kind of flip-flop, and they're actually the largest by far. And so we're just going to use one today and maybe save one for a later video. And the one that is currently the largest position, publicly traded position that I have is MPLX. It's the name of the company and the bolt and the ticker at the same time. MPLX is a subsidiary partnership of oil refining company Marathon Petroleum. Specifically as a partnership, it basically owns pipelines and gathering facilities and distribution tanks, as well as kind of a lot of the assets to either gather crude oil to get to Marathon Petroleum refineries, or the product pipelines and product distribution mechanisms that it has to get refined product from Marathon Petroleum refineries out to gas stations. And that's more or less its business. It also has a third business, which is natural gas gathering. And if you're all these shale patches that we've seen in the United States, whether it be Pennsylvania, Texas, and anything like that, that all has to be gathered to a central processing site. They build out the gathering pipes and things like that to bring them to central processing facilities to be used for petrochemical manufacturing or whatever have you. It's not exactly the most exciting business, and I'm not going to really get it's getting in the details that doesn't really do it really justice. What you need to know about this business is, because it is a subsidiary partnership, it is more or less run by Marathon Petroleum and basically run to harvest cash from it. It's a business where it dropped down all of these highly levered assets. It's got a lot of debt on it, but because it has extremely stable cash flows, it has contracts with Marathon Petroleum that account for 100% of volume on its facilities. They're on fixed fee contracts that are rated for inflation and things like that. So if it's not really exposed to commodity prices. It's more or less concerned with how much volume is actually moving through the pipeline, and that's all that matters. So it's not like it's going to see a lot of volatility from a quarter to quarter. Some volatility in natural gas gathering, because it depends on how much drilling is going on in any given moment. But overall, it's an extremely steady business in the oil and gas business, and excuse me, has a very, very high dividend yield that surprisingly, I think the market looks at it and say, well, that's unsustainable. But the way that the business is geared, it doesn't. It looks like it's going to be sustainable for quite some time. The current dividend yield is somewhere. Last time I checked, it was close to 9%. I may be a little off. It might be somewhere between 8.8 and 9% today. But even though it's doing that, the oil and gas partnerships, the ratio that we use is called distribution ratio. It's kind of basically like how much available cash is able to be distributed to investors, relative to how much is actually bringing in. And over the past few quarters, that distribution ratio has been about 1.6, 1.7, which means it's extremely healthy, that even if the business were to suffer some sort of big downswing, not going to be a problem in terms of actually paying out to investors. not paying out to investors. And so even during some of its salad days that it had during like 2021, it was even buying back stock because its stock was so cheap. And as a result, you have a company right now that looks like it's in very good financial position. It's got a very well aligned management team with its kind of parent business, Marathon Petroleum, and currently with a yield that I think the market is just kind of underappreciating this company. I've owned it for a very, very long time, and it's why it's my largest position, because I've just been sitting on it for like 6 years. And when you get 7, 8, 9% dividends that you reinvest automatically, things things go up pretty spectacularly over time.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.